Guys, in today's video, I'll be going over the 4 of my favorite undervalued stocks that I think have huge significant upside potential. So first, let's do a quick fundamental analysis on all 4 of these stocks. Alright, so the first stock that we're going to get into is Novo Nordisk, or ticker symbol NBO, which is a Danish pharmaceutical giant that specializes in diabetes and obesity treatments, particularly through its GLP-1 drugs like Ozempic for diabetes and Wegovy for weight loss, which have driven massive growth in recent years. As of mid-January 2026, shares trade around $59 with a market cap of approximately $203 billion and a forward PE of about 14 to 16. And the stock has declined nearly 50% from its 2025 peak amid slowing GLP-1 growth due to U.S. price pressures and competition, but it has significantly rebounded about 17% in the past month. And why is it undervalued? Because their discounted cash flow suggests it's trading at a 60% discount to a fair value of around $150 per share. Analysts like to point to post-2026 recovery via oral Wegovy launches, which has recently been approved by the FDA, which is huge and is one of the reasons why stock has gone up so much. They have stabilized pricing and new indications like MASH, which I think is one of their healthcare programs, potentially returning to 8% plus growth. And their current multiples are 1.5% price to book, and they have strong margins. The next stock we're going to be talking about is one of my favorites and one stock that I'm looking to get into, and that is Hims. Hims and Hers is a US-based telehealth company offering personalized treatments for weight loss, including GLP-1 meds. And actually, they do have a partnership with Novo Nordisk, which basically supplies them with the GLP-1 drugs that they get. They have sexual health, mental health, dermatology, and diagnostics via a subscription model. And their shares are currently around $32 with a market cap of roughly $7 billion and a PE ratio of 55x, which is kind of high. But I'll show you why I think it's undervalued below. The stock has risen four times over 3 years, but dropped 36% in 2025 due to regulatory hurdles and compounded meds, though it's up 25% over the past year. And why is it undervalued? Discounted cash flow indicate a 49 to 50% discount to a fair value of 63, fueled by an underestimated revenue compounded annual growth rate to $18 billion by 2035 through subscriber growth. They have international expansions and vertical integration like in-house compounding, which basically means they make their own drugs. And despite high acquisition costs, quick paybacks and margin targets of 20%, Reddit valuations peg it at 20% undervalued at current levels amid diversified offerings beyond GLP-1 drugs. And I think they are trying to get approval for the Wegovy drug too, which would obviously boost their sales by a lot. Now, the next stock that we're going to be talking about is Coinbase, which is a leading U.S. cryptocurrency exchange. They provide trading, custody, and wallet services with growing focus on derivatives, which I actually use. They have tokenization of real-world assets and institutional adoption. As of mid-January 2026, shares are near $243 with a market cap of $61 billion and a forward PE of 40 to 43. The stock is up just 3% year-to-date, but has tripled over 3 years, though it's down 42% from mid-2025 highs due to crypto volatility. And why it's undervalued. Some narratives see 37% upside to 383 fair value, citing 2026 catalysts like U.S. regulations, spot ETFs, and tokenization, expanding the buyer base and improving the fundamentals. Aren't fully priced in post-correction. However, counter views flag overvaluation by 124%, which I don't think is true, due to cyclical earnings peaks and competition from other exchanges like Binance and Kraken, and even Robinhood too. Overall, pro undervalued cases emphasize AI DeFi integration for 20% growth despite risks. Next up is ZETA, which is a global AI-powered marketing platform that uses customer data to help brands acquire, grow, and retain users through personalized campaigns. The shares trade are at around $23 with a market cap of $5.5 billion, an EV revenue multiple of 3.1x, and an EBITDA of 14x. The stock has doubled from its 2025 low, but risen 25% recently, with strong Q3 results pushing it up 11%. Discounted cash flow models show a 10% discount to 26, but analysts target 44 based on 21% revenue growth in 2026. Low multiples undervalue its AI moat. It also recently signed a partnership with OpenAI, but has gone down since then. And 20% compounded annual growth amid industry-beating execution. They still have founder-led innovation, with PEG under 1 signaling high growth not yet priced in despite temporary slowdowns. And another company that I don't have on here, but I've talked about it before on X and After Hour, which you can follow me on there if you want to, is Bull, which is a brokerage that has taken a massive beating. They are down about 50% from its all-time highs, or not its all-time highs, but its yearly highs, or not yearly highs, but this was kind of like this is manipulation, so I'm not even going to count that. But yeah, so overall, I think that I might make a video later on this, just because I want to really go in depth on it. But yeah, and so now let's take a look at the technical analysis on these 4 undervalued companies. So as you can see here, we have Coinbase, which, although it is below all of its moving indicators and below a trend line, I think that we may see some support at this level right here, the 200 level, or I don't know. I think if this stock had enough volume to break above this resistance, it would help, because I think it is a key to get above this 50 SMA to help it keep moving. And as you can see, this is like that long-term downward trend line. It's even been more noticeable from here, like down to here, kind of. So yeah, Coinbase has just taken a massive beating, and from here to its all-time highs, you would see a return of about 80%, which is huge. So yeah, this is a stock that I'm looking into. Probably wouldn't buy right now, as it's under key support levels, but maybe in the future, if I see some good news like the Genius Act or the Clarity Act passes, not the Genius Act, and yeah, so just some positive catalysts, maybe their earnings or something like that. Could do an earnings play. But yeah, those are just things I'm looking forward to in the stock. And the next one, it's not MicroStrategy, is ZETA, which is the AI marketing company that we talked about. This company has pretty good fundamentals, in my opinion. It's taken quite a beating. Since 2025, it was down about 70%, which is kind of crazy, and it has slowly started to climb back up. But over the past couple of days, it has taken beatings, which makes me think that it is a good time to get in. I think that if we can hold this 100-day SMA, or maybe even go down to this 200 and flip it to support, this would definitely be a good buy, because if we target to all-time highs, that is about a 80% upside, which is huge, and that's not even counting if you use leverage or options or something. Next up is HIMS, And this company also has been crazy, has been oversold a lot. Um, the stock has continued to go down, and honestly, I think that if we hit this key resistance level right here, that it would be a good buy. As you can see, both times it has come down here. It has shot up to like 60. So if it did come down here and then shot up to 60, that's over a 100% gain, which is huge. And the other one that I wanted to talk about is Novo Nordisk. This is the healthcare company, and I mean, yeah, just look at like what's happened to this company um, since since July 2024. It has taken just like a continual downtrend, reaching all the way down to negative 70%. But it has started to come right back up, and as you can see, it flips this 200 SMA into support, which you love to see, and it is also broken out of this trend line right here. As you can see, it was like holding this forever, and then it just broke out. So yeah, this is honestly one of my top 2 picks. I think my top 2 picks would probably be this and ZETA right now. But yeah, this is definitely something that I'm looking to get into, and if so, I would let you guys know. Some other honorable mentions are PayPal, which has been a name in retail trading. It is at a pretty key support level right now, so if it doesn't hold this, it may go lower, but if it could, then that would be absolutely huge for the stock. And also Netflix, which is down, I think it's like 40% from its all-time highs. Like 35. So this is another beaten up stock. Not quite looking to get into it right now, but maybe in the future. So yeah, that's it, guys. Thanks so much.